Your credit score is nobody's business, but your car insurance company has made it their entire business model. Here is the number that should make you angry. Drivers with poor credit pay over $1,500 more per year for the exact same car insurance as someone with good credit. That is not a typo. $1,500. For the same car, same driving record, same age, same zip code. The only difference is a 3-digit number that has nothing to do with how you drive. By the end of this video, you will know the 3 best insurance companies for bad credit in the US, UK, and Canada. You will learn the hidden third option that most agents will never tell you about. And I will give you a step-by-step plan to lower your premium by up to 40% regardless of your credit score. These are not hacks. These are legal strategies that work. Before I name the companies, let me explain why your credit score even matters to an auto insurer. Insurance companies have spent billions of dollars on actuarial data. They have found a statistical link between low credit scores and higher claim frequency. They are not judging your character. They are playing the numbers. Someone with a credit score under 580 is statistically more likely to file a claim than someone with a score over 740. That is the data. And because insurance is a business of predicting risk, they charge more for what they see as higher risk. In most US states and in Canada, insurers use something called a credit-based insurance score. It is similar to your regular credit score, but weighted differently. Payment history matters most, then credit utilization, then length of credit history, then new credit applications, and finally, credit mix. In the UK, insurers check your credit primarily when you choose to pay monthly. If you pay annually, many do not run a credit check at all. That is an important distinction we will come back to. The bad news is that poor credit can raise your premium by 20 to 50%. In Quebec, the surcharge can be even higher, sometimes adding hundreds of dollars to your annual bill. The good news is that not all insurance companies weigh credit the same way. Some barely use it at all. Some do not use it. And some have designed their entire business model around helping drivers with bad credit. That is where the real opportunity lies. Let me start with the US market, since it is the largest and most competitive. If you have bad credit, your first stop should be Progressive. According to a major 2026 analysis, Progressive is the best car insurance provider for drivers with poor credit, followed closely by Travelers. Progressive offers competitive rates and has something called accident forgiveness, which prevents your first at-fault accident from raising your rates. They also have a telematics program called Snapshot. More on that in a minute. Travelers is another excellent option. Their average monthly premium for drivers with bad credit is around $118, which is very competitive. They also have accident forgiveness and a new car replacement feature that gives you a brand new vehicle if yours is totaled in the first few years. The key with both Progressive and Travelers is that you must be proactive. They will not automatically check your credit again when it improves. You have to call them and ask for a rate review. If your credit has gone up by even 50 points, you could save serious money. Now, if you want the absolute cheapest option for bad credit, look at GEICO. MoneyGeek found that GEICO offers the best affordable car insurance for drivers with bad credit, averaging just $96 per month. That is nearly $50 less than the average driver with good credit pays with some other companies. GEICO has a telematics program called Drive Easy that can save you even more. And they are known for piling on discounts, but here is the pattern interrupt that most agents will never tell you. The third option is the one nobody talks about. Insurance companies that do not check your credit at all. That is right. There are insurers in the U.S. that skip credit checks entirely. Let me name them. Cure Auto Insurance operates in New Jersey, Pennsylvania, and Michigan. They do not check credit, occupation, or education level when setting rates. Your driving record alone determines your premium. A teacher, a CEO, and a construction worker with identical driving histories pay the same rate at Cure. That is almost unheard of in the industry. In Texas, there is Dillo Insurance. Dillo specializes in drivers that other insurers reject, including those with DUIs, coverage lapses, and bad credit. They do not run credit checks at all. You can get covered online in about 10 minutes. They offer month-to-month policies and handle SR-22 filings. The rates are higher than mainstream insurers. But if you have been denied coverage or quoted $5,000 or more annually elsewhere, Dillo is a lifesaver. Then there is Root Insurance. Root built its entire business around app-based telematics. Throughout 2025, Root has been decreasing the weight of credit scores and is eliminating them entirely. Here is how it works. You download the Root app. You drive normally for 2 to 3 weeks while the app tracks your behavior, including braking, speed, and time of day. Then Root gives you a personalized rate based primarily on how you actually drive. Your credit score matters less with Root than with any other major national insurer. If you are a safe driver but have bad credit, Root could cut your premium in half. And finally, Lemonade Car Insurance. Lemonade runs soft credit checks that appear on your report but do not lower your score. They only operate in 8 states for now, but they are expanding. These companies are the hidden option that most insurance agents do not want you to know about because they cannot sell them. Now, let me talk about the UK market. The rules are different here. In the UK, car insurance premiums average about £560 per year for comprehensive coverage, but drivers with bad credit can pay 20 to 50% more. Here is the critical distinction. In the UK, your credit score primarily affects whether you can pay monthly. Most insurers run a credit check when you choose to pay in installments, but if you pay your entire annual premium up front, many insurers do not check your credit at all. That is your first and most powerful move. Save up and pay annually. You will avoid the credit check entirely, and you will also avoid the interest charges that come with monthly payment plans. If you cannot pay annually, your best bet is to use a specialist broker. Companies like Premium Choice Insurance in Wolverhampton work with over 20 top insurers and specialize in drivers with poor credit, young motorists, and those with convictions. They can find policies that mainstream comparison sites miss. You should also use comparison sites like Confused.com, Money Supermarket, and GoCompare. These sites work with over 150 insurers each. The key is to be completely honest about your credit situation. Lying on an application will void your policy and get you blacklisted. The best mainstream insurer for bad credit in the UK is Admiral. They consistently offer competitive rates and have a telematics program called Littlebox that can lower your premium based on driving behavior rather than credit history. Aviva is another strong option, especially for older drivers. And AXA offers solid coverage with good customer service. But again, pay annually if you can. That is the single best way to sidestep the credit check entirely. Now let me move to Canada. The Canadian market is unique because credit scoring for insurance varies significantly by province. In Quebec, insurers cannot refuse to insure you solely because of your credit, but they can adjust your premium. Poor credit can result in a surcharge of 20 to 50%. In Ontario and Alberta, credit-based insurance scoring is legal and widely used. If you have bad credit in Canada, your first stop should be PAFCO Insurance. PAFCO specializes in non-standard auto insurance for drivers who do not qualify for standard coverage, including those with poor credit. They offer competitive pricing and flexible payment options. You can get a quote through comparison sites like Panda7 or rates.ca. Another option is to work with an independent broker. Brokers like Click Insurance in Canada have networks of over 30 insurers, many of which specialize in non-standard coverage. They know which companies are more open to drivers with bad credit. In Quebec, look for brokers offering what is called second chance credit insurance. This is specifically designed for drivers with bad credit, past cancellations, or lapses in coverage. Now let me give you the universal 3-step plan that works in all 3 countries regardless of where you live. Step 1. Improve your credit score. I know this sounds obvious, but most people do not realize how quickly small changes can impact their insurance premium. Pay your bills on time every single month. Keep your credit card utilization under 30%. Do not open new credit accounts before shopping for insurance. Dispute any errors on your credit report. Even a 20-point increase can move you into a better price.